The market is really bullish right now. And it doesn't matter if you're looking at altcoins, as you can see here, at the stock market, this is the S&P 500, or Bitcoin, all had parabolic moves in the last 3 days. And this happened just after the CPI data came out and the core inflation rate went down to 3.6%. Is this the trend shift we've all been waiting for after these pretty boring last 2 months? Well, I have prepared a lot of data for you in this video to analyze exactly that. So we will look at interest rates, seasonality of election years, the summer pattern of the crypto market, and much more. So stay till the end, and without any further ado, let's go. Welcome back to another episode of Phil Prince, your one and only stop for crypto finance and trading. So to start with, the annual inflation rate of the US, meaning year on year, went down to 3.4% in April, and that is better than in March, as you can see. And therefore the core inflation rate went down to 3.6% from 3.8% in March. So 0.2%, this is the biggest delta since August 2023, where we went from 4.3% to 4.1%. And this actually had been consensus, as you can see here, 3.6%, but it really doesn't seem like it, because markets reacted extremely bullish about this news. And at this very moment, it really feels like this could be kind of a trend shift, at least midterm. And of course, now we will have a look at multiple other charts and data that could undermine it in order to see if this is really feasible. What we shouldn't forget is that this year, 2024, is a presidential election year for the US. And the stock markets behave a little different in these kind of years. And I've actually found this pretty interesting chart here on Twitter, which uncovers the S&P 500 election year seasonal pattern. And for that, it actually uses data from 1949 to 2023. And it comes out that the big election year quarter ones dip April to May before it gains in the last 7 months of the year. And since 1950, actually this year, 2024, had the third best election quarter one. There is actually only 2 deviations where we had losses in the last 7 months of election years since 1950, and this is the dot-com crash and the housing crash in 2008. And here in the chart, you can see it actually pretty clearly. The black graph is all the election years combined. The green graph is the top quarter one election years. And in red, we have this year. And up to this point, 2024 is mimicking the top quarter one election years pretty well. And this at least suggests that from June to the end of the year, markets could pick up steam again. And that at this time, we do not have to sell in May and go away. So once again, based on this here, the downwards or sideways phase we're in since April is coming to an end right now. And June will be the start of the next bullish uptrend. Then I have another interesting statistic for you. And this is the S&P 500 presidential election 3-month seasonality. And this suggests that the S&P 500 has generated an average return of 7.27% during June to August of presidential election years, with data going back to 1928. So as you can see, this is also quite significant. This goes back quite far. And this also pretty much suggests that June to August will be bullish, July to September as well, but percentage-wise not as high as June to August. And then it actually goes down a little. All right, so this is actually pretty interesting. This is just an analysis for the stock market, so not crypto, although we have to say that these two are actually pretty correlated most of the time. What we don't have to forget, there's actually a summer seasonality pattern for Bitcoin. I've already shown this. This goes back 10 years, so this is the last 10 summer periods for Bitcoin, and every time we had the same pattern between May and September, and this is basically a sideways range, not without any price action or momentum. Most of the time we went up and then reversed the whole move before we started the next big leg up, of course, especially in bull markets. And in all of the cases, apart from summer 2021, it was up and then down. In 2021, it was down and then up. So both this seasonality pattern as well as the seasonality pattern for election years in the stock markets show that there's kind of a sideways range and then price picks up steam again. It's just that here we're already starting in June, and for Bitcoin here, based on this pattern, we're starting out a little later. So actually just before September, so August. But as this time around we had the quickest advancement before the halving in price, I think it's actually possible that the next rally could start earlier as well. So maybe July together with the stock market in June. I'm actually a little more neutral. I'm eyeing like mid of July, but that's just my 2 cents. Another thing that is more long-term, and I think is very, very important, is of course the interest rate. And in May, this remained unchanged. And when we have a look at the probabilities for the next FOMC meetings, so for June, July, September, November, and December, we can see that for June, there's 91% probability that it will remain unchanged once again. In July, it's actually only 70% at this very moment, but still a clear majority. But in September, it starts to look a little different. As you can see here, only 35% think that the interest rate will still remain unchanged. And there's 49%, meaning the majority, that thinks that we'll get the first rate cut. Same goes for November. Majority thinks there's a first rate cut. And in December, it's actually the majority that thinks we will even get the second cut already. Of course, these probabilities change all the time, and based on new information and new news and data, they will be affected for sure. But at this point in time, it looks that we will at least get the first rate cut in the end of this year. And a rate cut long term is bullish, you could say, because in the end, more money will be printed. But up to this very point, every time the rates were cut, this marked pretty much the beginning of the end for a bull market. So once again, if we see a rate cut, this is not super bullish for the short to midterm. This will likely mean that we will go into a bear market first. Price will go down, rates will be cut over and over again, money printing starts again, there will be a bear market bottom, and then we go again. Will this time be different? I don't know. I doubt it. So let's hope that the first rate cut will not be too soon. Please make sure to enter my Telegram group, which comes with one of my trading indicators and a 1-hour trading course that explains it and helps you to build your own strategy for free. I want my community to thrive. Secure your spot while it's still free. This may change for new members in the future. Link is down below. If you go over to the charts, you can see that through this recent pump, Bitcoin is in the mid-range. This is here, of course, the top range, and this is the bottom range. Not only that, the point of control is coinciding here with the mid-range as well. So this is a very important level. And now if we manage to break up here and establish this as a base, then we stand the chance of going to range highs. Otherwise, we will get a little bit of a rejection here, chop around, and so on. As I told you, I personally think that the real action will start in July, so around here. And this would mean that we will chop around a little, maybe go up and down here, and then somewhere here, break to range highs, establish it, and run it up. Of course, we can consolidate up here, but this doesn't change anything. By the way, as we're talking about this, do you think that I'm too bearish on this? Let me know down in the comment section. I wouldn't say I'm bearish, I'm just cautiously optimistic. Of course, I'm mid to long-term bullish, but I think it is at least more likely that we will range a bit here. When we have a look at altcoins, for example, SAI here, of course, we won't look at 100 altcoins here in this video, so I will just take this one here. They are mostly similar. Some went higher than others, of course. SAI is one of the coins that went up pretty steep here. We're just at this moving average. If we can break it, we will run it here into the green box, which is pretty much the mid-range here. This will be another 20%. So altcoins are getting a well-deserved breather here. Also very interesting, of course, the stock markets, the S&P 500 had this very nice pump, also due to the CPI. Before that, we were already going up after we had this beautiful retest on the gold moving average, which is very, very important, of course, as with many financial instruments and for the S&P 500 as well, as it serves as the ultimate support in bull markets. Now, I actually think that we won't go directly up from here because we basically broke the old all-time high here. And the last time we broke the prior all-time high, so here, you can see that we had this pump first, then a washout, and then it went vertical. And of course, I know this is tiny, but still, this is what I expect in the short term. So a little bit of a smaller washout here first, and then we go up again. Otherwise, if this little bit of a short-term dump should turn out bigger, then this blue moving average is where support will come in my opinion. But this as well is nothing crazy. We're talking about 2.5% here. So altogether, especially for the midterm, for the long term as well, of course, this looks very good to me. The sideways range we had was a good breather. And in the best case, this is the optimal base for the next big leg up. This is some of the things I'm looking at. If you want more of these market analysis, cycle theory, data-driven videos, let me know down in the comment section. If you have not subscribed to this channel yet, please ask yourself why and do it now. You really don't want to miss any of the next videos. Of course, this is not financial advice. This was Phil Prince for you. Until next time, crush the markets. Goodbye.